We're going to take a look at tax problems. Suresh Surana joins us to answer your tax questions. Mahesh is written in from Bangalore. Now, he tells us that right now he's received a notice over financial year 2010-11 saying that he has an outstanding demand for 31,000 rupees against his name. He has record of the fact that he's paid all the taxes for that period. Now, he contacted his ITCPC and they've told him that the claim was made by the local assessment officer in Bangalore. He later submitted all of his returns and his 26 AS papers to the Kendra, but no action has been taken. He wants to know how he can sort this issue out. And the reason why we're bringing it up, Suresh, is that we know there are several viewers and several investors across the country who are facing this problem where they get a notice about, a tax year, several years gone by, and they're required to pull up all of those details and hand them over. How do they make sure something like this is sorted out?
One, obviously, the demand of 31,000 rupees. Unfortunately, you will have to approach the jurisdictional assessing officer for this, in order to carry out this rectification. What you can do is also submit a formal, written request in which you can attach the proof of the payment and your 26 AS extract that this amount has indeed been paid. And thereafter, normally the jurisdictional officer will make the necessary correction. But if you just make an oral request, it may not be processed. It is necessary to submit the underlying documents based on which the credit can be given. So the challan and 26 AS extract and all those things, if you submit, I'm sure the jurisdictional assessing officer will give you the credit for that.
Next question comes in from Roopchand. He tells us his brother-in-law gave a gift of 1.25 lakh rupees both to his wife and his son. He wants to know if there are any tax implications on him because of that. Well, technically, a gift between blood relatives doesn't, attract any tax. Suresh, obviously nothing to worry about there.
So, Mr. Roopchand, the gift received from specified relatives, which in this case it will come within the specified relatives, there is no income tax on that. It is exempted. You can reflect it in the schedule of the exempt income, so whereby it will be just reflected as a piece of information. There is no income tax on that. Obviously, going forward, they will have to pay tax on whatever income they are earning on that gift amount.
Last question comes in from Sudhakar Reddy. Sudhakar wants to know how to save tax on fixed deposits. He says if he divides his 1 crore rupee liquid cash and invests in fixed deposits, 20 lakh rupees in each of his family members' names, what will the tax implications be? Suresh?
First of all, within the family members, you need to check if you are gifting the amount to your wife or to minor children, you will not be able to take the benefit because the clubbing provisions are applicable. But if you are gifting it to your children who are major, which means above 18 years of age, or if you are gifting to a parent, then they can claim separate exemption limit of 2.5 lakh rupees each. They can also, invest in Section 80C, various saving instrument and claim deduction of 1.5 lakhs. So you need to check who are the family members where you will be able to, without attracting the clubbing provision, you can gift it to them. And thereafter, yes, definitely to that extent, it may not be all the members, but certain members of the family, you can take the benefit of this basic exemption and by gifting the amount.